Hey everybody, Brian from Bearable Traders here. It's Friday and it's August 2nd. Hope everyone had a good week. This is the weekend video. It's a very shortened video this week because I am taking off. Long weekend here in Canada, so I'll be going camping with some family. And I just wanted to throw something up here just to take a look at what happened last week, where some levels are for next week, and what we're watching. So let's get down to it. Okay, so let's start out with a quick week in review, and you can see really what happened on Friday. We got those jobs numbers that came out. Everybody was sort of anticipating what they might look like, and they were a lot weaker than what everyone had expected. We got 114,000 jobs added, I believe, and that was well below what the expectation was. Unemployment also rose, and you saw the reaction immediately. The market sold off bonds. The price of bonds really rallied strongly, and yields sold off. We actually dropped below 4% on both the 10-year and the 2-year. It was a dramatic move on Friday. And the market's been hoping for weak job numbers and weaker, at least weaker inflation. I always been saying all along, be careful what you wish for. So they got the weaker jobs numbers that they wanted, and turns out really didn't like what they heard. So the market's sold off a lot. I am wrong on this number. It should be down 2.1%. Q's down 3.1, SPY down 2, and IWM took the biggest hit over the last 2 days here, down almost 7%. Of course, the sectors that really benefit the most from dropping yields, the utilities and the real estate, they're sort of your safe haven trades, and they were up quite a bit today, or at least they were up this week. Technology continued to take a hit, as well as the consumer cyclicals. So unemployment increasing, consumer cyclicals are going to be challenged, obviously. Again, as I mentioned, the 10-year down below 4%. What a dramatic drop. That is a big move for treasuries. And you can see here the 3.88 versus 3.8, which we went out with. The yields are about to uninvert, which means go back to what should be normal, which is the 10-year. The longer you go out in duration on your treasuries or bonds, the more interest you should get. And we've been inverted for some time here, and now we're looking like we're going to go back to a more normal bond curve here. And that's got people concerned as well. So because of the drop in yields, obviously the dollar dropped quite a bit here, almost 1% on the week. And some of the other risk-on trades like Bitcoin, of course, it went out last week around 68,000. This week, trading around 63,000 last I checked. So that was a week in review. Pretty brutal for the bulls, pretty strong sell-off, but maybe creating some opportunities for some buying, as we've been really getting a little bit overheated on a lot of the stocks, especially in the tech sector. So maybe creating some opportunities here. So let's take a look at some other. Okay, so before we go on here, I always like to do a quick plug for my books that are available on Amazon. You can see them there. Profiting as an Active Trader, How to Swing Trade, my oldest book, and my latest book, How to Trade Options. And you'll notice I do talk a lot about options trades in the room here, or a video as well. So if you want to check those books out, they are available for sale. So let's get down and look at some charts here. Okay, so let's whip through a few of these indexes before we wrap things up. As I said here on Friday, we got these jobs numbers, and you can see the reaction with the price of the bonds. Man, they just ripped to the upside. So I have a number of ETFs in my portfolio that hold bonds, so they did extremely well today. So that was a nice move up on the bonds. I'm also short some 91 puts, have been on the TLT here, so that's really taken those down in price as yields really dropped here. And with yields dropping, you can see what's happened with the US dollar. We're really back down into sort of an area of support here on the US dollar. So big drop just because those yields dropped as well. And you can see the QQQs, again, rough week here. Again, we just keep making a series of lower highs. Every rally gets sold. we are getting into an area where I would expect some support. And just going back to this level here, it looks like we did kind of come off that low of the day here and try to find support right around this level. So maybe we will get another bit of a counter trend rally next week on the Qs. On the SPY, let's take a quick look here. Again, we are into an area where there has been some prior resistance that as soon as we broke through it became support. So we're right back. We closed out right at that level or very close to it. Again, dipped below it and came back up. So maybe a little bit of buying there as some bargain hunting sort of came in to play as we got in later in the day. But you can see here, this is another area that I'd be aware of if we do start to really slide next week. This 524 level, an area on the SPY to watch for further support. The Dow, again, we kind of came into an area and just broke through this area of support. Prior resistance here, and sort of hard to find an area of support. And we did come down to this area right here where we kind of broke out from. So again, we came off that low of the day and we kind of found our way back up a little bit. So maybe we do get a bit of a move back up next week. IWM was the one where the huge amount of damage was done here. You can see we really topped out, double top here, and really just broke down as the day went on here. So closing out around 208. So really rough day on the IWM, but back to an area where there has been some prior support, and maybe we find a place to hold there and maybe bounce a little bit. But lots of volume here, and yeah, so areas of into areas of support to watch for next week. And of course, Bitcoin dropping quite a bit here. It's down at 62,500 now, 400. So again, risk off trade on Bitcoin. So that's kind of the way the indexes look as we went out of the week. I will not be going over any other trades. I don't have any time to do any research. So that's kind of where we're going to leave things and wrap it up. Okay, so let's wrap things up. This is, of course, a shortened version because taken off here, but you can see there's your levels for where we went out on Friday, and support and resistance for the next week. Economic events, you can see here, we do have some stuff coming up. Trade deficit on Tuesday. Yeah, nothing really earth-shattering, but there is some stuff to watch out for. And as far as earnings goes, I mean, we went through a huge number of sort of bellwether earning reports last week, so a little bit tamer this week. We do have a few that'll be interesting: Uber, Airbnb for the travel sector, Shop for consumer discretionary, Baba for Chinese stocks. So it'll be still be an interesting week for earnings, and probably volatility will continue to be a major factor in stock prices as we move forward into next week. So that's it, everybody. As I said, I'm going to wrap things up here. Monday, holiday in Canada, but markets open in the US, and we'll be starting as usual, 8 o'clock, trading the market open. I think I'm going to be away Monday, but we'll join you probably on Tuesday morning. So take care, have a great weekend, and enjoy yourself. We'll see you next week.